All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We saw something yesterday in the markets that we just haven't seen here for a little bit, and I wrote about it a little bit in the message feed, but I want to talk more about it because we're seeing that story continue here this morning. And here I have a minute chart of the SPY, right? This isn't the, best way to look at volume, but it's the way we're going to look at it here today. And it's just a minute chart over the last several days. And I want you to take a look at the volumes here in the last hour of the day. Back here last week as the market dove into the close, right? Massive volume. Not uncommon, not unusual. In fact, volume enough to say, look, any dip below this level is going to get bought up. That's what it's enough to say. We talked about it at that time, and all right, here we go. Markets dip below that level, and every time it's dipped below that level so far, it's been bought up. We had some pretty heavy volume here on Friday, into the close, and a little chop up and down and all around, right? A little bit of volume there, but no real directional bias of the volume. But yesterday, something different happened. When we talk about bottoms in a market, and you hear me use this kind of phrase, spectacular. Sometimes we just, when we've had an extended correction, a lot of times we see something pretty spectacular. And it's always a little bit different, right? It's never the exact same thing. And a lot of times you don't know it really till you see it. But we saw it yesterday. We saw something pretty spectacular. And what was that? Well, in the 40, when the last hour of the market hit, in that 45-minute period, the first 45-minute period, market fell over 50 points. You say, well, what's the big deal about that? No, nothing. We've seen that, right? We've seen that 50-point drop. Volumes were heavy. Okay, we've seen heavy volume 50-point drops in that much time. But what was different? What was different is the volume that came into the upside. And it took 45 minutes for the market to drop 50 points. And in the last 15 minutes of the market, on absolute monster volumes, the market rallied 40 points. It wasn't on light volume. It wasn't something where you go, oh, okay, little oversold bounce type thing. There was massive volume. It's not the kind of volume that algorithms themselves are going to set. And it's one of the first instances where we see fund managers turning from net sellers to buyers. And we saw that aggressively into the close yesterday. Now, what's going on here this morning? Well, we are seeing some massive volumes coming in this morning. And they are all on the upside. We are on S&P futures. We're talking about 10,000 a minute here on S&P futures. When we compare that to yesterday's volume, this morning's volume is more than double what yesterday's volume was. And it's all on the upside. It's all pushing higher and off of yesterday's action. I know, market opened a little bit red and futures and all that. Great. Big deal. But since the market is open, we have seen some massive volumes come in. This is a big change. This is a big change from what we have been seeing, from what the market has been experiencing, and it's the first time we're seeing this change. Right? This is the first time. This isn't something we saw on these other bounces, right? These other kind of pop backs in terms of this volume story. This is a very different one. What's that say? Well, that tells us very clearly that the lows are in. Now, when we look and go, okay, the lows are in for the day or something of that nature, right? You always hear me kind of say, hey, look, this is something where the lows can be retested or even broken, but chances of closing below this level are almost zero, right? We almost never see it close below that level. And so what's this level mean on a daily chart? Well, it simply means that if this level's retested or broken, it will snap back very, very quickly. but it is a sign of fund manager stepping in. And it's where you say, okay, at this point, I can start to look a little more aggressively if I'm looking to the upside in this market. Now, it doesn't mean be overly aggressive. It doesn't mean throw out the whole concept of, hey, wait for a higher low to come in, right? You know, for something that you want to buy that's free falling, right? Those things still all apply, but this is a different type of move in the market. You know, here today and what we saw in the last 15 minutes. So basically the last 90 minutes of the market trading session has seen a volume differential that is, you know, something we haven't seen so far. Here during this correction. Now, you know, not everything's out of the woods, and, you know, we still have midterm elections and all the other things going on. But in terms of just pure price action, some different action there. Some different action. And some action where, you know what, if you've been waiting and you say, you know what, I've really wanted to buy this stock, you know, and you feel underexposed, you know, not a terrible time to step in. This doesn't mean that all stocks are going to just go up magically. No, in fact, if this is the bottom, the participation rate in stocks as the market starts to climb is going to be lower than on this bounce or on this bounce or on this bounce. Why? Because it's not going to be algorithmic snapback. It's not just going to be oversold snapback. It's going to be fund manager stepping in with some differentiation. Now, it's not going to be the differentiation that we saw back here, right? You know, it's not going to be that, but we are likely to see some hefty differentiation sector to sector here overall in the market. So a very different element, a very, very changed element. You know, there have been some that have been asking, you know, hey, what's the market got to do to bottom? When's it going to do it? What's it going to do? Well, it just did something that is very reminiscent of bottoms and something we haven't seen so far, and something that, you know, is a big switch, and I think this is the first time we've seen that. Now, I'm very interested to see if the market internals, you know, kind of shift with it, right? We saw some of the market internals shifting yesterday, but you know, then we saw news come out that U.S. is preparing more tariffs on China should talks break down here in November. So those internals kind of switched down. We saw it catalyze that 50-point sell-off, and you know, things like the bullish percent index still pushed on lower. So we didn't really see any improvement in the market internals. You know, here this morning, are we seeing any? Yeah, we're seeing a little bit, but it's minute. You know, it's pretty small, at least so far. If you look at the sectors that are kind of leading the way, we still have staples, consumer staples up near the top. Right, so that's one of those things where, as they're leading, it tells you investors are not overly comfortable here just yet. You know, we have this consumer discretionary lagging, but that's an Amazon effect. You know, you look outside of Amazon at consumer discretionary. You know, there's some just. I mean, Walmart just doesn't stop right here, just keeps on flying, and you know, you have Target up nicely today. Some of these names that we've been talking about in the consumer discretionary space doing very well. So it's not a terrible mix of sectors here because of the performance levels, but it is still a little bit conservative here overall. Okay. All right, for the challenge, I have my cash and my Adobe. Adobe yesterday, I think it was down $12, and then, you know, rallied 6 into the close in a matter of moments. You know, just kind of continuing to hang out and chop around. We've come down to the 200-day moving average, and this is where I kind of have a little bit of choice to make. Do I want to add right here and you know, increase some of my exposure there? I'm apt to say yes. but I do want to see today play out a little bit. We are seeing tech overall lag this morning, ahead of some major earnings in tech this afternoon and later this week. Facebook this afternoon, Apple later this week. So we're seeing tech lag a little bit here today en masse. I mean, you look at Amazon, it's down, 1%. You look at Facebook, it's just gone green. So we are seeing just some lagging in the space here. And Adobe's pretty much trading along with the rest of the sector here this morning, even on a percentage basis here, which has been the norm. I mean, that's what Adobe has been doing. It has been trading along here with its sector overall. This is still something, and as I put in the note this morning, I think, has a $30 rally in it if the market has bottomed and we see a significant bounce in the market. I think we're going to be talking about Adobe up $30 in the next couple of weeks. And do I want to add here? Do I want to add that risk factor, right here? I'll be looking at it. I don't have any kind of short-term confirmation in the hourly chart, telling me, hey, you know what? Good to go. All we have is oversold and, kind of snapping back here to the area where I talked about it yesterday, this kind of 240 level. So I'd love to see that level hold. I'd love to see the stock push up off of that level aggressively. I don't expect that it's going to happen here today with a little bit of lag in tech ahead of some of the tech earnings. But if we have even decent earnings out of some of these names like Facebook, and you couple that with a little bit of a market bottom, we could be talking about these stocks trading significantly higher here going on forward. Okay. Alrighty, I am getting a message that we are buffering a little bit, so I'm going to end this, and I will be right back on, and we're going to go take a look at American Airlines, and we're going to go take a look at General Electric here in a little bit of depth. Talk to you soon.